Hello and welcome to today's A-Team Group webinar on Brexit, reviewing the regulatory landscape and the data management response. My name is Sarah Underwood. I'm an editor at A-Team Group and I'll moderate today's webinar. Our expert speakers today are Linda Gibson, Director, Head of Regulatory Change at BNY Mellon Pershing, Joseph Byrne, Privacy Solutions Engineer at OneTrust, Bill Fennick, Vice President Enterprise at Digital Realty, and Simon Uden, Chief Operating Officer, Data Solutions at London Stock Exchange Group, Refinitiv. I'll ask our speakers to introduce themselves in just a few minutes, but first, so that you can make the most of the webinar today, to the right of your video screen, you'll see a panel showing both polls and questions. We'll be running 3 polls today, so the polls will appear in that panel. Please take part so we can gauge your opinion. In the question panel, please place your questions for the experts in that panel anytime you like. We'll take questions throughout the webinar rather than keeping them all to the end so that we can be sure to answer as many as possible. So questions in there as well, and we'll get to as many as possible. That's me then. So let me come to our speakers. And Linda, would you like to introduce yourself?
Thanks, Sarah. Good afternoon, everyone. I'm Linda Gibson. I head up regulatory change at BNY Pershing. And in that role, I'm really responsible for overseeing the reviews of all the emerging regulations and rule changes and thinking about the impact, not only for Pershing, but also for our clients. And we look to kind of anticipate and guide them through the regulatory change to see not only the threats, but hopefully some opportunities.
Excellent. Thank you. Joseph.
Hi, I'm Joseph Byrne, the Principal Solutions Engineer at OneTrust. So my role is typically to demonstrate and articulate the value of the OneTrust solution, but I also participate in many panels and events such as this, where we talk about privacy issues and emerging changes.
Thank you very much indeed. And Bill.
Hi there, my name is Bill Fennick. I'm Vice President of Enterprise at Digital Realty. Previously it was Interaction. We've now combined the organizations of Interaction and Digital Realty. I ran originally the financial services segment at Interaction and spent about 18 years at TIBCO, Reuters, Thomson Reuters, doing a lot of the data and low latency program. So very much looking forward to this conversation.
Thank you. And Simon.
Hi there, my name's Simon Uden. I'm the business manager, COO of our data solutions business. That's the heritage part of the London Stock Exchange Group, so the traditional trading venue data sets. And that piece, I actually started my career about 20 years ago as a data analyst at Reuters. So my career seems to have gone full circle now with the acquisition of Refinitiv. Not quite sure what my role will be in the new world yet, but we shall find out. But thanks for having me on.
Excellent, thank you all. And coming to you first, Simon, and setting the scene with the end of the Brexit transition period now well behind us, what does the UK regulatory regime look like?
Yeah, it's a fascinating period for sure. We, as it currently stands, the sort of onshored regulation legislation that we've had from the EU is essentially still pretty much identical to the pre-Brexit regime. There's some movement away from that and ideas to move away from that somewhat, which we'll come on to. But of course, we know that the sort of key focus of the UK authorities is to sort of improve UK competitiveness, in Europe and globally, to ensure that London remains a sort of financial hub. We've seen some evidence of this already through the UK listings regime that's came out early this year or late last year, and we know that further consultation on amendments to the capital markets regulation, MiFID and MiFIR, are forthcoming. Personally, I would expect, kind of hope that the UK regime to be more calibrated, specific to the needs and the composition of the UK market. Within the EU piece, obviously there's an enormous number of member states there need to be considered, so compromise and timely process is part and parcel of that legislation process. So you would hope in the UK now, without these compromises, it could make for swifter and clearer policy making. So fingers crossed for that. Okay. I guess we should. Sorry, Sarah. So one more thing, I think we should also consider that the UK authorities were quite an influential part of the EU regulation prior. So although there might be some divergence, there are likely to be some similar approaches as well, because effectively it's the same people doing the same roles, and also both follow, international standards. So that will hopefully sort of help with that divergence. At least there'll be some commonality between them. So that's kind of how I picture it at the moment. Yeah.
Okay, Linda, how do you see things in the new regime?
Well, I think we're 4 months in now, and we're beginning to see a kind of a less predictable regulatory agenda, and timelines are starting to be fragmented as the FCA starts to flex its muscles. It's independent from the EU. It's said that it will do what's best for the UK market and seek that competitive advantage, as Simon said. So that also means not only will they do what's right for the UK, but they will work to their own timetable. And that's going to cause some problems for firms that are operating globally. Not only do they have the uncertainty of different regimes, but also different timelines to work to. And we know from a systems point of view that adds kind of additional complication to an already busy timetable. I'd say that 1st of January was just the beginning. What we're going to see is the need to really track regulatory change with a keen eye. It's not going to be good enough just to track the changes to MiFID, MiFIR. It's looking at what's been said both at ESMA level, UK level, and maybe even into across the European jurisdictions. They might look to start gold plating and have their own comments. I think the key issue, though, is the loss of MiFID services passport. And my advice that we've been speaking to our clients about is don't wait for an equivalence decision, or don't expect an equivalence decision. We really need to work out now how to grow your business and look at the opportunities without equivalence.
Okay, well, staying with you, Linda, so what sort of specific differences are you seeing now between the EU and the UK? And you mentioned it wasn't all sort of fixed in place yet, so do you see further change coming?
Yes, I think that's all we're going to see, that there's plenty more change to come. So far, we've seen, just to pick out some high-level examples on the prudential rules. The EU have got their own regime. The FCA are looking to implement their own version of the prudential rules. It's slightly tweaked, but the UK were definitely instrumental in determining the EU legislation right up to December. So the UK aren't going to vary in any significance, but they will tweak and they will make changes. And again, this is, to my point, this is one regulation where the UK will implement 6 months later than the EU, which is going to cause problems for some firms. Another example is operational resilience. So not only do we have new prudential rules, we're having new rules requiring operational resilience. And again, the UK is leading there. There's lots of other regulators globally starting to look at operational resilience. In the EU, they have DORA. In Ireland, the CBI have started looking at operational resilience. But again, it's the UK that are driving it. We've already mentioned MiFID II. Certainly a UK version of MiFID II, I think, is coming through. ESMA have finally got their final thoughts together on what was meant to be their quick fix, and it's now not coming in until February 22. The FCA have looked at that. We've only seen 2 pieces of the quick fix consulted on by FCA so far, and that's removal of the best ex reporting, both for venues and for trading firms. They've gone further than ESMA and looking to relax some of the rules regarding research unbundling. So we're going to have to wait for the later this year. FCA have promised us a further 2 consultations on their MiFID II review. So that's an indication of things to come. I think later on this year, FCA are going to turn their attention to kind of the green finance, sustainability, ESG. And again, they will look to be a kind of global leader in shaping those regulations. But there's certainly, it's going to be a very busy landscape for reg change this year.
Okay, thank you, Simon. What do you see in terms of the differences and how the rest of the year might pan out?
Yeah, just picking up on the sort of MiFID part, because I guess that's the piece I'm closest to. So we've seen some indications around this sort of removal of the share trade obligation and the removal of the double volume caps as well, so dark pool trading, which is likely to sort of create a divergence between the two regions. Also in the sort of clearing of derivatives and exchange traded derivatives, that seems to have I think that was due to go live July 2021, the open access for exchange traded derivatives. The UK pulled out of that, I believe. And then I don't suppose that's likely to sort of cool tensions between the UK and the EU regarding, just more broadly, the derivatives clearing aspect. So that extension to the equivalence granted to the clearing houses ends in next year. At the end of that, there's likely to be some significant change in regulation put in place around that. So yeah, lots of change ahead. But yeah.
Okay, that's great. We'll talk about how you can begin to manage all this change ahead in a little while. But first, before our next question, let's take an audience poll if we can. As I mentioned earlier, you'll find the poll to the right of your video. And the question is, what challenges has the regulatory regime in the UK alongside that of the EU caused at your organisation? You can mark as many options as you like. And while you do that, let me come to Joseph, if I may, to talk a little bit about the challenges the different regimes raise for financial institutions in both regions.
Yeah, certainly in both camps. I think what you'll certainly see is you've a much greater administrative overhead. But from the conversations Simon and Linda were having, many of the things they were talking about were tweaks to existing regulations. So I wouldn't expect everything to be dramatic straight away. And as we've seen, when privacy laws are introduced, they often mirror each other. So you should be in a reasonable position to adapt what you have, assuming you've got something in place. And indeed, if you've got a software solution in place, you should be able to refine and adapt that, so you're not starting from scratch. So I don't think we're going to be in a bad place to begin with, and I don't anticipate there will be huge, dramatic, sweeping changes in the immediate term.
Okay, Bill, what would you say to that?
Yeah, really interesting conversation up to now, and I kept going through my head the spirit of the law versus the letter of the law. And I'm just wondering, I mean, I've heard the word tweak twice or three times now, and we know that financial institutions will have to tweak some of the things, perhaps the rules around venues, to tweak it to stay, of course, in the legal context, but nonetheless have to tweak it for various reasons, which just adds a lot more complexity, because all of a sudden, if you tweak it for A, it has unintended consequences for B, etc. I was thinking as well about this whole fragmentation of liquidity. I remember back when MiFID was first introduced in 2008, we applied a lot of technology to try to, if you will, solve the problem with the proliferation of all the multilateral trading facilities, etc. And I think technology will help to some degree with some of the challenges, but many of the challenges I fear are going to be business challenges versus really a technology challenge in that respect. So those are just some initial thoughts that I've had just based on some of the conversation here as well.
Okay, we'll come back to that in a minute about how people are managing those challenges, because you hear things as diverse as closing offices to moving people all over the place, changing the product line and so on. But we'll come back to that in a minute. And could we see the poll results there in the meantime? Lovely, thank you. Joseph, if you have a moment to consume those, does that look as you might expect?
Yeah, that's more or less what I would expect. I would expect to see, and what we all sort of recognise. Yeah.
Okay, Bill, would you agree with that?
Yeah, it's interesting. Maybe it's kind of nice to see that technology is almost at the bottom, which I was kind of mentioned as well. So I would indeed, and I think the complexity is going to be the most difficult.
Okay. Fine, lovely. Well, let's come back to some of those issues. As you mentioned, business issues, not necessarily tech issues. And Bill, how are FIs trying to minimize and absorb the challenges that have been thrown up by this dual regulation?
Well, potentially some of the activities that will take place is actually declining some business for lack of being able to fulfill orders perhaps not having the right volume level, and perhaps as well to cancel out some of the product offerings that they've had in the past that have been relatively standard, which they just won't have liquidity to fulfill. So it's a way of minimizing, they'll lose a bit of business that way, but perhaps it'll be a way of minimizing a lot of the complexity and the cost, where they'll be able to accelerate on the products and services that they can actually deliver and hopefully profit from.
So it's sort of about finding a balance between what is worthwhile, what isn't worthwhile, whilst keeping revenues at a same or higher level.
I would have thought the opportunity cost of, do we really want to spend all this time on something that where the revenue is relatively, a rounding error versus our core business, whatever that might be.
Okay. Simon, what would you say there? Do you see people rethinking what they're doing or taking different actions?
Yeah, I'm sure there have been. We obviously, from my perspective, looking at our trading participants in particular, I expected to see a bit more activity than I have, to be honest. Most of them successfully applied different strategies, whether it's opening European branches or subsidiaries, or relocated some of their businesses or just their activities to the EU. And it's quite interesting, sort of from a Perceptron perspective. There's some big headlines about like a move of trading volume from London to Amsterdam. And if I kind of explain what's happened for us and our clients, it helped sort of clarify that somewhat. So we obviously had to create a European entity for for MTF Turquoise, our APA Trade Echo, and ARM Univista, in order to continue to operate within the EU. So this obviously came at a cost. It was, in relative terms, it's not that costly. It hasn't been that costly for our clients, I wouldn't say. It's more the complexity of the data. I think we're going to come on to that a bit later. That's more of the challenge, and it's that the audience agree with that, which is good. But what we've seen since the creation of this is basically, that flow, that trade reporting activity that was just happening in London has just moved to our Turquoise entity in Europe. So even though it has moved to Amsterdam, it's still not, it's not changed the way our customers behave. They've just had to readjust their systems to these new venues effectively. So it's really the sort of clients have been navigating within the rules rather than sort of changing behaviour.
Okay, thank you very much indeed. Let's take another audience poll and find out a little bit more about the data management aspects of the changes and how challenging they've been. The question being, what are the data and data management challenges of extended regulatory reporting at your organisation? Again, you can tick as many of the boxes as you like, whilst I come to Joseph. How do these challenges boil down to data and data management challenges, and how are these challenges being addressed out there in the market?
Well, essentially, where you may have had one process or one approach, now you're going to have to consider many. And as Simon noted, you may need to scale up your team or move them to a different location, indeed, to deal with that. So we may need to adapt our resource and where it is. Also, with regards to how we're informed, the ICO typically informed us across all of Europe. They're going to perhaps focus now on UK GDPR. So we'll need to consider other ways to keep ourselves completely informed across all. So it's essentially maybe more work and more resources that we would need to deal with this.
Okay. Simon, what would you say from a data and data management point of view? I know people are worried about it.
Yeah, it's perhaps possibly easier for me to say from my position, but from talking to customers, it's not insignificant. It's not insurmountable either. A lot of companies who, we interact with global firms who do this outside the EU and the UK already. So used to reporting to different entities and dealing with different regulators, etc. So the crux of it is that the reference data sort of determines where and what to report. So I think that's kind of critical to this whole thing, is having a really clean set of reference data, accurate. And the complexity that the audience have touched on is not to be underestimated either. It's reporting the same thing potentially twice in different jurisdictions and also across asset classes. The actual physical fields themselves can be used in different ways to report. So there's some complexity around there. Most, in my experience, are using data management techniques, whether that's internal or using a third-party vendor who can help them with that. And I think it's kind of critical that if they are doing this internally or choosing a vendor, that they are flexible to change, because this is a fluid beast at the moment. So yeah, some challenges, but not insurmountable, I don't think.
Okay, can I just come back to you on that, Simon? You mentioned the quality of reference data. Now, the quality of data is always an issue, and pretty much every conversation in capital markets. Has this sort of been highlighted when people are looking at using that reference data, perhaps for compliance in two different instances, or is it still just a big challenge?
I think it's a challenge if you're doing it internally. I think there's a lot of good third parties out there that can help you with that challenge. And we have Univista, for example, who can help customers with that data management aspect and the reporting aspects of it. But yeah, I suspect it's a challenge now as we transition to this sort of new landscape. But once it's up and running, I would hope it would be part and parcel of people wanting to do business.
Okay, lovely. Thank you very much indeed. And maybe look at the poll results, please. Yes. Is that what you would expect, Simon? Yeah, duplication. I thought that would be lower down, as people were trying to very much sort of simplify the regulatory response. What would you say there, Simon?
Yeah, the additional data is critical here, and I don't think that's going away with all the different transparency regulations that are coming in as well. This is going to just get bigger and bigger. It's a trend we've seen for years now, the increasing need for data. So it's sensible, yeah.
Okay, and Joseph, what would you say there?
I would have thought quality might have been further up the list, to be honest, that and managing more data. Maybe we don't have a full appreciation of how much yet, so it's perhaps why it's lower down the list.
Okay, fine. Thank you very much indeed. And once again, if you have questions for our speakers, please do put them in your little question panel, and I'll put them to our speakers just as soon as we come to a good spot for that. So coming back to you, Linda, and taking a broader view and considering the challenges caused by divergence between the EU and UK, what best practice approaches should FIs be taking to achieve compliance in these regions? I know we've talked about many of the elements of compliance, but how do they put all that together and make sure they get it right?
So I think even before we had the Brexit divergence, there was been a trend over the last 5 years or so that each new regulation brings more data to be sourced, stored, manipulated and reported. So I think firms were already challenged by this whole data concept. And then we had the GDPR overlay and the security issues. So data is absolutely crucial, and the divergence between EU and UK rulemaking has just made this more complicated. So I think one of the the main points that firms should really be reckoning with is horizon scan, know what's coming along, but then be able to think about what it means to your business in terms of your processes, your systems, your people that we've talked about, boots on the ground. Where do you need boots on the ground? Do you need to set up another entity in an EU jurisdiction? And also, very importantly, have you got staff with the right expertise that are able to meet compliance with different versions of kind of similar but not identical rules? So everything's making kind of the reporting and data management more complicated. And maybe to take an example is transaction reporting. Arguably the most complex piece of MiFIR. And 3 years on, we have ESMA now consulting on making changes to the transaction reporting requires. Again, that word tweaking. Alignments of EMIR and MiFID reporting. They're replacing some data elements and just some changes to the scope. And FCA have yet to respond. So here we have another potential divergence. And it really calls out that firms should be reconciling and sampling their own data so they know that what they're reporting through to the FCA or a European regulator is correct. And here we're talking about expectations around front to back reconciliations, trading records, right through to what you've reported through to your regulator. And FCA recently called this out, I think it was in a Market Watch, that the number of firms that transaction report to them against the number of firms that actually request sample data, there's a huge disparity. So if you're one of those firms that are not actually requesting sample data from FCA, it raises a big question mark as to what actually you're doing in terms of checking your data. So I think, you know, it's going to be more divergence again on transaction reporting. We don't know what FCA are going to say, but it's going to be divergence in types of instruments firms are going to have to handle and report. So it's really getting processes, systems and expertise in place. And now's probably a good time to start. Okay,
fine. Having mentioned questions, I have some questions here. So let me see what we're asking about today. Yes, Bill, I think this is one for you. A mistake on my part, I'm afraid. It says the poll doesn't address the biggest challenge to us, which is loss of business through the end of the passport regime. You were talking about business. Tell us how big a problem that is going to be. And if anybody else would like to chime in after Bill, please feel free.
Yeah, I mean, it's a very broad question, you know, and loss of business in which products, etc. But I think so I'm quite a I don't know if I'm a pessimist or a realist on this. I don't think this is going to have a phenomenally happy ending with the divergence, because I think there's going to be a lot of emotion here. It's quite correct that the British worked very closely with Brussels in forming the rules over the past few decades, but I think a lot of emotion is in play right now, and I think that's where the business might unfortunately go. We hear a lot about clearing. I think, Simon, you brought it up with derivatives clearing, so that might be the first business that we see. I think there's an amnesty or dispensation till mid 2022 with the derivatives clearing. But I would imagine most of the euro business will be pushed more and more towards Europe, and I think that will be due, just purely my opinion, very subjectively, due to the strong arm tactics of Brussels, because of the emotion. I mean, Linda, you mentioned DORA. And I think DORA is a creeping principle that will come into play much stronger, where the UK will be seen as a third party country, or a third country as such. And we're seeing that play out slowly right now with Euronext, with their reputed move to Bergamo, or just outside Milan. So we're already seeing businesses, if you will, being repatriated back to Europe. And we know that since the introduction of the euro, there has been a lot of emotion in play about Britain not being part of the euro, but having the lion's share of the euro business here. And of course, that was due to historical reasons and the fact that the systems are here. So I think there are multiple levels of businesses. So, you know, we can talk about the trading business and some of the product business, but also a lot of the technology business and this huge cottage industry that has been formed around it, being accountancy, legal, finance, and of course technology, and of course my business as well, which I must admit might actually benefit from it, because many institutions will need to have almost two infrastructures set up to be able to there. But this is very subjective, so I'm happy if somebody wants to take a contrary opinion as well to what I just said.
I would just chip in on the clearing, the kind of the euro clearing decision. I think there's definite emotion and obviously drive to move it to Eurozone. But it's whether they could actually get the capacity to be able to clear that business. And at the moment, it's demonstrating that they haven't, by the fact that the equivalence, that we've got this temporary equivalence decision to allow Eurozone to scale up for euro clearing. So I think it would be an interesting test case to see whether the temporary equivalence decision is pulled, and then it's the kind of the rubber hits the road as to whether they can actually scale up to clear that business.
Dare I say, excuse me for interrupting, but dare I say that sometimes the notion of sovereignty plays a much stronger role than prudence.
Yeah.
I'll let you interpret that for as you'd like.
Anybody else on this one? No? Okay, let me come to another question, if I may, and I'm going to put this one to you, Linda. You've touched on this, and we've talked about change, and this question asks, rules for reporting to particular trade repositories have changed. Do you expect more change, particularly here, and how could that impact on data management and cost?
So potentially, yes. Again, if we're starting to see changes to transaction reporting, trade reporting, that's going to have a knock-on impact to the actual trade repositories. I haven't seen anything specific, but it's early days in ESMA's consultation about the changes that they're looking to make. And as Bill was saying, we have FCA now as the third country. So it will be interesting to see how FCA responds on any changes specifically around trade reporting, transaction reporting.
Right. Okay, thank you. So that's sort of one to watch.
Yeah.
Okay. Here's one about jurisdiction. I'm not sure how serious this one is. So I might pass this one back to you, Bill, for now. It says, what if Scotland would get the opportunity to exit the UK and join the EU again? Would this mean additional volume would leave London and land in Edinburgh? I think this is a bit of a guessing game, but...
Yeah, boy, I don't know. I think my accent is going to give it away that I know very little about Scotland. So, you know, I know that they have a very large asset management business up there. So perhaps Simon and Joseph are more suited for this question than I am. I think it's too much conjecture with that. So not to be disrespectful, but I think there's a lot of conjecture. I mean, whether indeed Scotland leaves and whether they'll be accepted back into the EU as well or into the single market there's a lot of well, that's something that a futurist will have to predict.
Okay. We have any futurists amongst us today who'd like to take a guess at that?
Well, there's certainly a lot up in the air. Firstly, that if Scotland were to become independent and subsequent to becoming independent, if that happened, where they would stand in line to get back into the EU, because I believe there's a queue. So if all those things were resolved, then we could probably get to the question about whether everything was going to move to Edinburgh. But it's not out of the question, I would say, but maybe further down the line.
Okay, fine. Well, this one will be for much further down the road, I think, but we may come back to it. Let me come back to our questions. And Simon, Linda talked about the EU and UK. Can you tell us a little bit more about the impact of separate EU and UK regimes on global regulatory reporting and how this can be addressed sort of simultaneously and successfully? Because obviously the cost will rise if you can't try and make some kind of harmonization here.
Yeah, I think it's just another prong, I guess, in the landscape. So people are already reporting in the global framework. Just because the EU and the UK have split, it's just another area of separation that they have to deal with. So as much as it's a change for everybody in the EU at the moment, I go back to my point, it's not anything particularly new for global organisations. So I think the global organisations will actually be able to absorb this and to make these changes better than sort of EU-focused or UK-focused entities. And I guess how to be addressed simultaneously and successfully. For me, you know, everybody kind of plays their part in this. I think one thing we need to be careful of is divergence, and kind of we still need regulators to talk to each other. And I know, you know, Bill was mentioning the hostility there, slightly tongue-in-cheek here, but in 2024 we've got a general election, there'll be a change of personnel, change of EU Commission. Is that going to help relationships between the EU and the UK? Possibly, I'm not so sure. But I think that regulators need to do their parts behind the scenes, you know, outside of the political environment, as well as financial institutions. You know, our customers based in Europe need to speak to us directly. You know, we're London Stock Exchange Group. We can help them manage regulation and speak to the FCA on their behalf and work with our customers still. So as much as this is, you know, a change for those firms, it's something that most firms are dealing with already, I would say.
Okay, coming to you then on that, Joseph. Obviously, you know, in recent years, there's been a lot of conversation about single point solutions for different regulations and so on, and a great desire to move away from that from a point of view of resource, money, amount of data you're using, the amount of data you're using twice. How are you seeing this in terms of sort of integrating everything into a more global approach, or at least for global regulatory reporting?
Well, if we consider a simple example, that of reporting incidents or reporting breaches, previously, a UK organisation could make use of the one-stop shop and report it once. Now, if they've got an establishment in Europe, they need to report it twice. And if they don't have an establishment in Europe, they'll need to report it to every country where the incident was involved. So we're just creating more work. It may be the same report, and we may use the exact same system to report it. We just have to do it now multiple times and manage those multiple lines of communication. So that's one significant change. On the side of sort of records of processing activity and these sorts of things, at least in the short term, that should stay mostly the same. And I don't believe that would be vastly different in the short term. But yeah, essentially we're having to do the same thing more than once, but perhaps we can leverage the same system to do multiple lines of reporting to at least ease some of that burden.
Okay, thank you very much. Thank you both. Let's come to a final audience poll. And the question this time is, how is your organisation supporting the increased data management demands of UK, EU and global regulatory reporting? Again, you can tick as many boxes as you like. Well, I come to Bill. So Bill, please tell us a little bit about the technologies, tools and services that can support dual and global reporting, and how can FIs ensure their platforms are cost effective, efficient and able to support future changes. I have a question about AI and ML, so I'm going to add that on here if I may. It says, what steps can we take to include AI and machine learning in regulatory reporting, and what are the likely outcomes? Joseph, you might like to pick up on that one afterwards on the basis of what you were just saying about the need to bring things together and not repeat yourself. Bill.
Yeah, so I had a chat with an ex-colleague of mine who was doing compliance for a long time for exchanges, just to get to sound him out as well on this. And we were both very much of the opinion, as I mentioned before, that we don't know how much of a technology problem this is. I think a lot of the technologies already exist, relatively speaking, and it's much more of a business problem that we have here. So yes, we can throw technology at it, but I'm not sure if it would be complicating the picture more than trying to almost separate, if not divide it. We were thinking a bit more about straight through processing and perhaps the distribution of data to the different applications or processes there, and that of course could very well be part of the puzzle. But I have to say, and I think a few of us have a couple of years of experience in this. We've been speaking about straight through processing for well over 15 years now, if not 20 years, and I don't think anybody's quite cracked that nut properly yet. So I'm once again, I don't feel this is a real technology problem as such. I think it's much more on the business side of it. And from AI, and I'll definitely defer to Joseph on this if he's got a lot more knowledge on this, but we don't see it being really implemented per se or applied per se to these challenges. But I'll leave that open for perhaps a different opinion.
Sure, and it's interesting that you say, Bill, that it's more of a business problem than a technology problem, because that sort of aligns well with some of the notes that I've written. And technology-wise, I can only really talk about our solution. That's just the sort of way it is. But it was designed to be adaptable. So where we have existing clients, they're not looking for new technology. They're coming to us and saying, how can we adapt this to the new regulations or the new challenges we have? And we also have our team of lawyers that inform our platform, that are upgrading or updating how it responds or informs people legislation-wise as well. And we have some existing AI built in already for data discovery and reporting, which helps, sort of being introduced at the moment. But I think, you hit the nail on the head there. It's not so much a technology problem as more a business problem.
Okay, fine. If we may, let's go to the poll results and see what people are saying. That's interesting. Move out of the house, new systems in-house, systems development, outsourcing for reporting, and nobody has not had to make any changes. Joseph, coming back to you, does that look sensible? Well, I'm sure it's sensible, but does look how you expected.
Yeah, I'd be interested to know more about the external reporting services, or how reliable they were, or so on, or if there are companies looking to take that on. I'm sure it's probably an industry that's had a bit of a driver at the moment. Many of the people we deal with prefer to manage it in-house, because they've got maybe that bit of extra control over it. So.
Okay, Simon, can I ask you on that one, as a provider of external reporting services? Does that seem like an interesting and probably the way outcome it's going to go?
I mean, it seems perfect as a provider of external reporting services, right? But no, it makes sense. That the thing is, someone like Univista is set up to make changes to understand these regulatory changes as they happen, to sort of service the customers. It's a big outsourced shop, effectively. So it's not surprising, and I think given the proliferation of regulation, and it seems to continue to do so, you know that this problem's not going away. It's just going to get bigger and bigger. So yeah, it doesn't surprise me.
Okay, fine. Linda, can I ask you on that one, as a practitioner, do you hear more people talking about moving stuff outside?
I think more people are looking at their options. They're not naturally just going to continue to adapt their own technology. But I think an interesting decision is the quality of the provider, and going back to the AI point and just the proliferation of providers. There's a lot of providers out there that aren't regulated, and that's simply because they don't need to be. But it also exposes a potential weakness. They don't have maybe the bandwidth or the infrastructure to meet a regulatory request. And obviously that will come to the firm that's taken their services, who will then immediately pivot to the provider and say, we've got this request in from X regulator. They need this information in 24 hours. And an unregulated tech firm may simply not be equipped to be able to do that. So you really need to choose your business partner very carefully and make sure that they've got the bandwidth and the experience. That would be my comments on that.
Okay, you're not going to like me for this, but we have another technical request coming in. And it says, perhaps Simon, you'd like to address this one. Where did I lose it? It's here. Yes, we're thinking of moving our regulatory reporting to the cloud. Where do we start? And is this going to be a good idea? And is this a good point to do it while people are sort of rethinking a little bit?
Yeah, yes, I'd say it's cloud technology just enables that expansion, scalability of it. So as it changes, it's easier to scale. We have taken our reporting services and our in-house data to the cloud, as are most businesses, to sort of leverage that from that scalability of the technology. Whether you should do it now for all these changes, I guess, depends on the bandwidth of your organisation and whether you're set up to do so, because it's not easy. It sounds easy translating things to the cloud, but in my experience, it takes some time. So the idea definitely is right, I would say. It seems to be the future of data management more broadly, but timing, it's up to you.
Okay. Joseph, you're nodding your head. Do you see many clients wanting to move to the cloud now, or are they sort of stalling while they get everything in place for the new UK regime?
Yeah, certainly. And I think there's some things that still are misunderstood about the cloud. The cloud doesn't have to be everywhere. We deliver to the cloud you'd like it to be. So you might want UK-centric or Europe-centric. We'll make sure it's in those data centers. And there's also still sort of misconceptions about how secure data is. In the vast majority of cases, it's more secure in the cloud than in some servers in your organization basement or so on. So I think it's sort of an unstoppable trend. It's where everyone's going, and if you actually look at it properly, it's many cases the best and most secure solution.
Okay, so you don't see firms waiting until they've got all this the regulatory and the legislative stuff pinned down?
Not so much. I think they want to start with what they have now, and they'll adapt as the rest comes in, rather than perhaps just wait or sit it out. Yeah.
Okay, fine. Linda, any views on the cloud and this respect?
It's certainly an option out there. It's as to timing, that's got to be a firm's own decision with everything else they've got on, and make sure that they've done their homework, really, that they've and maybe a conversation with your regulator ahead as well as to what you're looking to do, because this, I guess, would come under an important business change, something you need to think through. Okay,
fine. So a lot of change, but cloud could certainly be a helpful element. That's excellent. Linda, I have one final question for you. I'm not sure I understand it, but you may, because you've talked about the FCA, and if not, we'll take it offline. But it says, thank you for this seminar. We would like to know if FCA is already starting to contact market participants about landing slots.
I can only think that's around the temporary permissions regime. So for EE firms that took advantage of the temporary permissions regime, the FCA allowed them to continue to service UK clients. The landing slots are around the date of which the FCA expects them to submit their full application to become a full FCA authorised firm. And FCA they have a kind of a timeline. I don't know on what basis they're approaching firms, but firms are now being told you will need to submit your application for authorisation, say, in June. And that's a full commitment then to be fully authorised in the UK.
Okay.
Hope that answers the question. Sorry. Otherwise, we can take that offline. That's the only place that I've heard landing slots mentioned.
Okay. Something means something to you, Joseph, that one?
No, I just like the term. Sounds very exciting.
Okay. Anybody else want to comment on that one? It sounds perfectly reasonable, Linda. No? Okay. Well, we're coming to our closing question now, and I'd like to ask all our speakers what guidance they'd give to data practitioners working on regulatory reporting post-Brexit. You've had a lot of ideas about that there will be a lot of change. There doesn't need to be a lot of change to your technology necessary, that this is perhaps more of a business change item. So let me come to you first, Joseph. What guidance would you offer?
I think organizations should try and leverage what they already have first, whether that's spreadsheets or a software solution, rather than doing a sort of knee-jerk reactions. I'd suggest they engage with the ICO to see what their immediate priorities are, and then consider using a software solution if you are relying on more manual means, because all of this is going to create more work, and you can perhaps address that more efficiently with a software solution.
Okay. Simon, what advice would you offer?
For me, the top one is communication with your NCA. I think we are, the people, the businesses that they're sort of looking after. So the communication about how regulation is, how it's divergent, how it's similar, how we want to feedback on it is critical to keep that dialogue going. And then the other two are sort of data and technology issues. So reference data, absolutely critical to this whole process. Make sure that that's maintained correctly and accurately. And then secondly, tech, if you do it in-house or you choose a third party, just ensure that the technology is flexible enough to deal with future changes, because this isn't standing still.
Okay, coming to you, Linda, as our practitioner today, what advice would you give?
I think if we hold on to my opinion that we're unlikely to get equivalence, and rule divergence will simply increase. So firms should be looking at the impact. They should be horizon scanning and really looking at the impact of this across their business. This isn't a compliance only problem. It impacts reporting, it impacts technology and the risk teams, but also really importantly, it impacts the C-suite. I remember now in the UK, we've got the senior managers regime. So if there's fundamental changes to the business or to people's roles, because reporting has changed, the regulations have changed, they need to be informed, and they also need to understand their personal impact, because they are accountable and liable. So you need to think about the senior managers regime. And in Ireland, we've got the SEER regime coming. So it's extending this, it's this point around accountability. And linked to the horizon scanning, looking at MiFID II, the reviews, it's just getting more and more complicated. So one of the things that I've just started doing is a divergence tracker. We're actually looking at the kind of by themes like product governance, trading calibrations, what the different regulators are suggesting. And so we've got a kind of one sheet view of how things could stack out. And this is something that, our clients are interested in. I think it's only going to grow. So I'd definitely make recommendations. As I think Joseph said, it doesn't need to be anything particularly clever or exotic, Excel spreadsheets, but you need to have a good view of what's going on. And just finally, this point about just make good use of your own data on the basis that we're all being asked to collect and store more and more data. Just make sure you understand what your data is saying about your own firm. What does your MI look like? And again, to this point, what's your C-suite seeing? Do they understand what your firm's now doing and how it looks from a data and a reporting perspective? I think everyone gets so wrapped up in meeting the reporting needs for the regulator, but they don't always play that information back internally and think about what it says about their own business.
Okay, thank you, Linda. You mentioned opportunities earlier, and I presume that's where they come in.
Yes, yeah, that there are some. You have to look very closely in some of these regulations, but there are opportunities and also synergies across your business. So it's worth searching for.
Okay, that's great. Bill, some final words from you, please.
I would have to just really echo a lot of what was already said. I was thinking about it prior, leverage your data. You probably have that data somewhere in-house on many different types of applications, and somehow you have to bring them together, be it on spreadsheets or in databases or wherever you might have it. I think it's really important, particularly in financial institutions, but in every institution, this whole need to break down the silos. The data is probably sitting there. You just probably don't even, and particularly in this day and age when we're all working remotely, you don't have actually that easy connection to the department next to you or something like that. So that's a big one. And then thirdly, it kind of goes back to one of my other points. Narrow your focus. Try to understand where you're really making a good return on equity, and narrow that focus down and try to exclude a lot of the white noise that might be out there, and that will hopefully help with the whole management process there in terms of the data.
Okay, thank you. And thank you to all of our speakers for sharing their expertise and experience. It's kind of a very broad topic in many ways, but a very current topic. And as we've talked about, there will be more change to come. So I hope that all goes well for you all. Thank you too to OneTrust and Refinitiv for sponsoring today's webinar. It's been a good conversation. And just before we close up, just a quick note that if you scroll down your screen, you can see more information about our speakers and our sponsors, and you can see additional options. These are 18 resources that may be of interest. You can register for our RegTech Summit Virtual, which we'll host in June. You can download our Regulatory Data Handbook. The latest edition does touch on changes to the EU and UK regimes, although we'll be catching up on it again towards the end of the year. Or you can sign up for a webinar covering the evolution of data management for the buy side. And if you click on the side menu on your screen, you can browse webinars and events and click on any of interest to be registered immediately. That said, that's it for today. So thank you again to Linda, Joseph, Simon and Bill, and thank you to all of you who've watched the webinar. Please complete our feedback form, as we're always keen to hear your views and improve our products. Meantime, thanks again and goodbye.